Everyone, hope everything's going well. Okay, I'm looking at a few things here. I'm going to look at the fundamentals and then I'm going to look at experts who look at technicals. Fundamental analysis, I've talked about this before, the near-term forward spread. You're negative. That's a warning sign. When was the last time you had a near-term forward spread negative? Right before the pandemic? 2007? 2000. This is, and right before the dot-com bubble. This is showing you that there are problems in the economy. Now, that doesn't mean that you're gonna see the stock market crash tomorrow. My prediction is May. Will that happen? I don't know. But it should be around that time frame where the markets should top out. So that this is what the Federal Reserve uses. Jerome Powell likes this indicator. Now, what are three divergences to watch from the technical end? Right? I am a huge fundamental guy, but I understand that, there's accumulation and distribution that give clues to positioning of smart money in the market. Okay, we could look at all of this, and I think we should look at and listen to everybody. JC Peretz, three divergences to watch. And he said that we're looking at Dow theory divergence between the Dow Jones Industrial Average and Dow Jones Transportation Average. You saw this in 2000, 2008, 2015 when you had that China flash crash. I totally remember that. I got smoked on some trades. And you saw in 2020. In this particular case, you're seeing new highs in the Dow Industrials, but lower highs in the transports. Okay. Warning sign. Another interesting comes from small cap stock. Has no requirements for companies to earn any money. They made slightly new highs, although one could argue they are still in this range. With S&P 600 index, which requires a track record of earnings in order to be included, never made a new high. You can see over here. Finally, and arguably the most important change in dynamics in this market is high beta underperforming low volatility. The ratio between these two group of stocks tend to move with the S&P 500. But this year, while the S&P 500 has gone on to make new highs, the ratio between high beta and low volatility has not. And the thought process for high beta is that people are willing to take more risk with high beta stocks versus lower volatility. Now, if you don't see that ratio going up, that's a warning sign. And this looks like a time where, in my opinion, the highs, once you see the highs, or once I see the highs, I'm going to be unloading this month or in the next month, April. I plan, if my game plan is correct, I plan to sell some stocks during this time frame. Yes, I do expect some stocks to rip, crypto, the meme coins, but time's running out in this market, in my opinion. A few other things, I looked at the junk bonds. They haven't been rallying. They've been stalling. Okay. Lumber. I like looking at the lumber futures. And right now, lumber hasn't been able to make a new high, the futures market. I get it. Situation out there in all these futures markets, there's always volatility, you could say, but I'm not seeing highs. I get it. There's contract rollovers, but look, this was the high couple of weeks ago. Not able to make new highs. If you look at it from like a 5-year time frame, 2022, let's look at max. Okay, can't pull it. 692. But I don't think this is accurate because this is only looking at the contract, this specific contract. Because lumber, if you look at the continuous contract, let's look at that. That would be a better example. Lumber, let's maybe look at it from a 3-year perspective. All right. You can see lumber got to like 2100. And where's it? 600. It's not even less than 600. Not even making any highs. Warning sign, warning sign. Market has ripped since last year. Okay, I get that. But while the S&P makes new highs, lumber is not. Something to note, junk bond's not calling this rally as well, so or feeling this rally as well. So I want to hear your thoughts. What are your thoughts on these divergences? And I'll talk to you later. See ya. Bye.